Welcome to the Money Rules Podcast, where we tackle your personal financial matters with leading financial advisors. Your host, Boitumelo Ntsoko.
Today we're diving into the world of derivatives, a term that may sound intimidating but is actually a powerful tool in the right hands. We'll break down how derivatives trading works, why people use it, and how and what you need to get started. To guide us, I'm joined by Maboko Siabi, a senior analyst at Brockstock. Welcome to the show, Maboko.
Thanks for having me, Tumi.
To start, could you walk us through what a derivative is in simple terms?
All right. A derivative is a financial contract where its value is based on an underlying asset, like stocks, commodity, or currency. There are several types of derivatives, right? With the main ones being CFD, option, futures, forwards, and swaps. But mainly people are often using CFDs, all right? And these are contract for difference. Basically, a CFD is when a client gets into an agreement where the buyer and seller exchange the difference in the asset prices from the start to the end of the contract without owning the underlying asset.
And let's address a couple of questions. First, are derivatives mainly for day traders and speculators, or can long-term investors use them as well?
Well, derivatives are popular among day traders and speculators, right? They are also useful for long-term investors. Long-term investors might use derivatives to invest in underlying assets without owning it, or to hedge against potential losses in their portfolios, helping them manage risks without selling their investments.
Are they only for experienced investors, or can beginners also use them?
Beginners can learn about derivatives. They need to go through the education, right, and learn it safely, learn the right approaches, get the right educational resources. However, derivatives are complex and come with risks. So beginners should start with foundational knowledge and perhaps try simpler instruments like ETF CFDs so that they are actually exposed to diversified set of instruments.
Now, for beginners, what would be the main appeal of these investments? Are there particular risks as well that they should be aware of?
Okay, so the main appeal for beginners is the leverage that derivatives provide, allowing them to gain exposure to large assets with less capital. However, like we just mentioned earlier on, risks include potential losses of initial investment and the high volatility of many derivatives. It's really essential for beginners to understand how to manage their risks and manage them very carefully.
Now, with those risks in mind, how would you advise them to approach this trading if they're just starting out?
Just to start off with here, since I am not a financial advisor, right, it's just information so that clients could actually make better investing decisions. And we would like beginners should start small, right? And they should start small and perhaps look into ETFs, like we said earlier, because it is more diversified and it's a more passive way of actually investing, so that they can get to actually learn the ropes of how it goes before they actually move into more individual CFD stocks. All right. So this also doesn't need a lot of capital. However, like we've said earlier on, that they do also involve a lot of risk, right? And involving leverage, which can amplify both gains and losses.
And can you walk us through some practical steps to start trading? Maybe provide us a guide on opening a trading account, choosing a broker, and learning the trading process.
All right. So this is a very important question, all right, because I think this is where most investors, get it wrong and they miss certain steps, all right. So they'll need to open a trading account with a licensed broker, right? And by licensed broker, they should have an FSP number, which is licensed by the FSCA, that offers derivative products. They should start by researching brokers to ensure that they are reputable and that they have the right tools for them and resources they need to actually make proper investment decision. Once they've chosen the broker, they should open the account, complete the verification, and in most cases these days, it doesn't take no longer than 5 minutes. And then they fund their account, and then they begin learning and starting to invest in these different types of CFD assets that the brokers are offering. Mostly, people should avoid brokers that are actually emphasizing excessive returns. If something seems too good to be true, it likely is a false promise.
Just staying with the whole trading platforms and the tools that you mentioned, could you maybe provide some recommendations for our investors, especially those who are just getting familiar with this field?
Those that are just getting familiar with derivatives, right? Many brokers offer platforms that are beginner friendly and include educational resources. Look for platforms that give you human support, human support where you have an account manager that can assist you with understanding what you're doing, and you guys can both go through your portfolio to see how you're doing. And the next also important thing when it comes to derivatives, remember that it's used by scalpers and short-term investors. So charting tools are a very important tool to have, so that you can actually make more technical analysis around it. And then you have to have tutorials, all right? And tutorials will actually help to make things simpler for you so that you can understand even the platform that you're actually working with so far.
Maboko, just staying on that, could you maybe mention a few platforms that people can go to?
All right. So to start off with, we do have Brockstock. All right. We give you access to these tools. All right. We have over 1,400 US companies on the app. We have over 240 ETFs that clients could look into. And, we also have JSE companies, over 160 that they could actually potentially look into investing in.
Now let's talk about stocks. Are there minimum amounts required to start trading, and what fees should investors be cognizant of?
All right. The minimum amount varies by broker and derivative types, all right? Generally, fees to watch out for would be like brokerage fees, transaction fees, and margin costs. If you are trading with borrowed funds, always check with your broker for a full breakdown of fees. So these need to be very transparent. In most cases, they need to be on the website, so that you know what you're getting yourself into and so that you understand what you need to be cognizant of.
And then just before we wrap up, what's the one key takeaway you'd give to a beginner about derivatives trading?
For here, the key takeaway is to prioritize learning and understand the risks involved in derivatives. They can both amplify gains and your losses. So a solid understanding and cautious approach are essential for long-term success. So with that said, they need to be very broadly into technical analysis as well as fundamentals and be able to actually understand what they are doing. And, the nice thing in this day and age is that we have things like stop loss order, right? And take profit order. So, those are ways to actually learn how to manage your risks.
You just mentioned stop loss orders. Can you just break that down for our listeners who might not know what that is?
All right. So a stop loss order is basically when, say, for example, now a share price is at 10 Rand. Right? And the client then buys the share at 10 Rand. But then they are not expecting it to actually go below 9 Rand. So they place a stop loss order there so that they can be able to close their position once it reaches that level. And that actually makes sure that you are able to minimize your losses, because remember that the losses could be amplified. So in order to minimize it, you need to actually place a stop loss order because you can lose all your initial investment. So those are risks that you can actually use to minimize it.
All right, we're going to leave it at that. Thank you, Maboko, so much for joining us on this episode.
Thank you so much for having me, Dumia.
That was Maboko Siabi, a senior analyst at Brockstock.
Thanks for listening to this episode of the Money Rules Podcast. To listen to more, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Moneyweb, your trusted source for business and investment insights.